Hello, millionaires. If you have a large drawdown on the deposit and you want to reduce it and return your money back, then you have a solution. And this is Forex locking. Right now, lock all your negative account and keep watching this video. In order to lock, it is necessary that the volume of buy orders be equal to the volume of sell orders. Suppose you have an open buy order on your USD with a volume of 1.5 lots and open sell order with a volume of 0.5 lots. To lock negative drawdown, you need to open an additional sell order with a volume of 1.0 lots. Once you locked, your drawdown will not increase from now on, and you can safely watch this video to the end to learn how to reduce your locks profitably and additionally make money. But let's do it step by step. To be honest, you can reduce your locks manually, but you can do it completely automatically. Personally, I developed an expert advisor that helps me day and night, so I don't worry that I will miss the opportunity to reduce volume of negative orders and whereby reduce the drawdown. Because sometimes the drawdown decreases even when I sleep. So, my expert advisor can fully automatically work with drawdowns up to minus 60%, can reduce a volume of negative orders, can reduce locks, and most importantly, it can make money on Forex. If you have a big drawdown on deposit, then watch this video and you will learn how to reduce the volume of negative orders, reduce locks, and make money on Forex. If you don't understand and cope with how to reduce the drawdown on the deposit, then contact me and I may be able to help you reduce your drawdown. Let's begin to consider that Forex locking is and how to get it out of it. What is locking? Locking on Forex, as you already understood, is when the volume of buy orders on the one instrument is equal to volume of sell orders. So it doesn't matter which way the price of the instrument goes, up or down, your negative drawdown will be fixed. Swaps will be charged every day. In most cases they are negative, but the increase of your drawdown will be insignificant. In any case, you will have time to analyze the situation in the market to make the right decision. There is at least two types of locks. Positive, a situation where the open price of the buy order is lower than the price of a sell order. Let's look at the positive lock on the chart. I open the sell position. If the price moves in the direction I need, then after some time I have profit and want to fix it, I need to open a buy position. I use the Expert Advisor Money Printer Ultimate to help me to lock positions. For that I just tick Panic Lock checkbox and the advisor will do the rest. And a negative, a situation where the open price of the buy order is higher than the price of a sell order. To simulate negative lock, I need to open a buy position. Price moves in a negative direction and increasing the loss. To fix the loss, I open a sell position. Again, I want to draw attention to the fact that when positions are locked in loss, the loss doesn't decrease or increase, but due to swaps that are usually negative, the loss may increase. In both cases, the volume of sell orders is equal to the volume of buy orders. However, from my experience, I can say that a negative lock occurs more often. Let's look at the scenario for reducing lock. Scenario number 1. Reduce negative volume by 50%. This scenario is the simplest and most effective. The main goal of this technique is to reduce the negative volume by at least half. To reach this, you reduce the negative volume by 50% by closing the positive volume by 100%. In other words, then the sum of the positive order is equal to half of the amount of the negative. Then the positive order is closed completely, and the negative is closed 50% of the volume. The initial volume of each locked order must exceed the minimum lot of 0.01, otherwise it will be impossible to reduce volume by 50%. There are many situations on markets to use simple and complex reduction of locked position. Consider a simple situation where there are only two positions, buy and sell, with a volume of 1.0 each. Let's check how the advisor can reduce the volume by 50%. I will mark the reduction zone and put the red line. In this zone, the advisor should calculate all commissions, swaps, and small profit and reduce lock if all rules are applied. As soon as such a moment arises, the expert advisor will close all positive position at 100% and the negative position by 50% of the volume. Now, let's consider a situation of complex reduction. The complicated situation is when many positions of different volumes are opened on the chart. To demonstrate the work of the advisor in such conditions, I created a simulated situation. I have opened 3 positions of different volumes. Now, I lock all positions by just ticking the panic lock checkbox. The expert advisor will calculate the volume of open positions and open the missing position. In this case, the advisor will open a sell position. To give a sign for expert advisor that it can start reducing the volume, I just tick the reduce panic lock checkbox. If I tick the checkbox immediately, the expert advisor will reduce the volume by positions by 50% as soon as price enters the right zone. Also, I can tick the checkbox later in case price move further from extreme positions. The expert advisor will close a much larger volume. If you remember, I showed a table of the relations of the reduced volume and the distance from the extreme position. So expert advisor will reduce based on this logic. In other words, the further the price is from the extreme position, the larger volume will be reduced, and thus the smaller negative volume will remain in the market. So let's start the advisor, let it work. A few days later, volume is reduced by 50% and with a high accuracy. What to do next? There are also many scenarios. For example, I can open a new buy position, it's called an averaging, and such a scenario is much better because after a reduction at the top of the chart, the volume has become smaller. And when I open a new position, the closing price of all positions will shift lower or closer to the current price. In this scenario, closing all positions has higher probability to close in profit because price already has made large move and now it is time to pull back. This strategy could save my capital. The positive aspects of this scenario are: the first, if after reducing the negative volume, open a new order with the volume equal to the current negative volume, then the closing price of both orders, it's named averaging, will shift 50% closer to the price. And the second, if you do not increase open volume, that means do not open a new order, and the price continues to move in the negative direction, then the speed of increase in drawdown will be slower by 50%. Do you think that 50% of negative volume is the maximum amount that can be reduced? Write in the comments what you think. Let's look at the real example from trading. Let's suppose that I have a lock with a total volume of 1.0 lots. The distance between the positive and negative order is 50 pips. The price moves by 10 pips. Let's calculate how many lots you can reduce from negative volume. In this case, it doesn't matter in which direction the price is moving. The main condition is long-term price movement from the extreme order, highest or lowest order. The table shows that to reduce the volume by 2 times, it means by 50% of negative volume, the price must go a distance of plus 50 pips from the extreme positive order. If the price passes plus 100 pips, then the negative volume can be reduced by 0.75 lots, which is 75%. In other words, then closing a negative volume, the volume of only minus 0.25 lots will remain open. However, do not forget that the longer your orders in the market, the more swaps, they are usually negative ones, will be charged to you. I hope that you understand how it is profitable to reduce the loss. Those who didn't guess those, I'll summarize. You need to wait for a big price movement in order to reduce the negative volume. You should also not forget that locking is not a way to make money, but a way to reduce the volume in order to reduce the speed of increase of negative drawdown. The movement should be such as to reduce the volume by at least 50% or more. If you can't reduce the volume by 50%, I don't recommend reducing the block. Now open your chart and see how far the price has moved from the beginning of this video. How many percent can you reduce from your negative volume? If you can reduce the volume by at least 50%, then I will consider that my experience was useful to you and also helped to make a profit. If you were unable to reduce the lock correctly and you need my help with your drawdown, please contact me and I may be able to help you. I trade both, with stop losses and with the locks. And how do you trade? Do you use locks? How much did you earn with locks? Have you ever reduced locks and did you succeed? And finally, thank you for watching my video to the end. I hope you learned something new and now you can convert this knowledge into money. If you liked my video, subscribe to my channel and of course like it. If you don't agree with me or agree, write about it in the comments.